Okay, let's go on part two for my Galaxydoc Market preview for the week ending May 24th, 2024. That's the upcoming week that we're talking about. I already talked about part one, and if you haven't seen that, I highly encourage you to watch the part one. I'm breaking it up because my videos are getting much, much too long. And this way, you'll get it in bite-sized chunks. Okay, now, Meltup continues. In this part two, we're going to be talking about the broader market technical analysis. That includes the Nasdaq and the S&P 500, as well as some of the market breadth indicators and critical levels. We'll discuss that in detail. However, the summary as well as the watch list will come on part four. So you have to watch until the part four. Okay. So if you haven't noticed already, we have a Twitter or X.com channel. It's at Galaxydoc Market. Follow us. There's a lot of great, insightful information that you won't get on the YouTube video, and I'm pretty much on there every single day. And if there's something worth mentioning or a chart that I want to discuss, I will put it there. Okay, now all of our members will have a leg up on all of those, but it's still a great way of getting into those analysis and materials. Okay, so please join us. It'll be a great resource for your trading. Okay, now here's the disclaimer. Read it, pause it. If you agree, please move forward. Okay, again, I'm belaboring the point here, but we are on X.com, Galaxydoc Market. Please check it out. If you don't have to follow, but I think it'll be worth your while for your trading resource. Okay, we got great content. Thank you so much for looking. Now, we have to look at the S&P 500 market sector analysis for additional clues as to what the market is doing, and as well, we should be looking at the Nasdaq and some of the other indicators such as the VIX, as well as the 10-year Treasury yield. What is that doing? What's the VIX and Treasury yield doing, along with the U.S. dollar? And then also looking at the S&P 500 sector analysis here, right? So this is what we're going to do. We're going to be looking at the sector analysis for additional clues as to where this melt-up is headed, and if we can see any type of divergences or weak sectors. Now, we already talked about in part one about the consumer demand destruction that is occurring, and that is a reality, folks. All right. And no matter what the U.S. government alphabet agencies are putting out, we are in a hyperinflationary environment. We are in a job wage growth declination environment. We are in a job loss environment. Okay, America really doesn't produce anything anymore. Our industry, I think, is exporting printed money overseas for inflation. We're exporting inflation. Unfortunately, the rest of the world is getting sick of that, and those printed money, monopoly money, we talked about that in part one, is coming back now into U.S. slowly but surely. So this is the sector analysis, and I love stockcharts.com. I don't get paid by them, but this is one of my many tools that we use and I use to help me produce these important charts, as well as looking at what matters in terms of trading. Now, when we look at these, it's important to understand that the sectors that have the most amount of strength is noted by these scooter or the sector strength. Okay, that strength is in the utilities, financials, as well as the industrial sector. There is one stalwart, which is the technology sector fund. However, it is near the top, and you can see, but it's not at the 90s or 80s. It's in the middle at the 75.5, which is still good, but it is the only one that is showing some negativity. So is there a potential for weakness forming in the technology, which has been doing the heavy lifting in this managed market that we're dealing with? And so we need to look at that, okay? And then we also need to look at why the financials, well, we already know why. We talked about that ad nauseum. Financial sector is being supported by the central banks because the banks are in trouble and they are being funneled with printed money and supported to give the illusion of strength. Now, let's look at some of the weaker sectors. And of course, the weaker sector is going to come Surprisingly, in the materials sector, you would think that materials and consumer staples would be much higher in the list. And this, again, is related to, especially in the consumer staples sector fund, due to the consumer demand destruction, right? If you don't have money, yes, you're buying more essential things like food, shelter, energy, and those kind of things. But if you don't even have money to buy sufficiently that amount, it's going to be affecting the consumer staples. Okay, these are foods and grocery stores and things of that nature. It is not good, guys. And of course, the healthcare sector fund, what are you going to cut first? If you can't afford health insurance, well, that goes first. And then again, if you can't afford to keep your AC on during the summer, you're not going to be doing that. You'll be taking the bus, the Uber, you won't be driving. And so the energy sector, this is where a lot of the solar powers and gasoline and natural gas companies are in, okay? And the real estate sector, pay attention to this, folks. I've been talking about the fact that even though the inflation is catching up on the real estate sectors, not factors, and that the price is still rising despite of the fact that the Fed is continuing to create quote unquote tightening. If that really did work, I don't think it's really their plan to make it work. I think their plan is to hyperinflate all these hard asset classes, including real estate, gold, and everything else, hyperinflate so that they can hyperinflate out of their debt crisis that they've created. I don't think it's going to end well. But the most important one that I want you to focus on is this consumer discretionary sector fund. Okay, this really is, right, the consumer demand destruction story. And so we'll delve into that in a little bit more closely as we move forward. Okay, but realistically, we've got these upper echelon, which is showing some signs of weakness, especially if pay attention. Again, I'm belaboring the point here. Technology sector fund, consumer discretionaries, those are very, very important to figure out. And then, of course, we'll look a little bit at the financial sector fund, why they're so strong, and is there any signs of breaking? All right, so let's move into the analysis. All right, we're looking at more of a graphical representation, and as I've said, really all the sectors look fairly bullish, right? I mean, there might be a topping candle on the SPY here, but I think that this week, as you'll see from my analysis, I don't think this melt-up is done. Slow grind melt-up. I'm not talking about anything impulsive, like I'm going to get so super excited about, a new bull market forming. It can't. The fundamentals are saying it's impossible, right? But as long as the Fed prints money, as long as we distort the truth about, CPI numbers, jobless claims numbers, I mean, it's ridiculous, right? In part one, I think I did a sufficient job of showing you those discrepancies. Here's the discretionaries, though. Okay, everything is kind of broken out right here. There's a little gap up higher and we're moving sideways. And yeah, during this dead cat bounce, relief rally, we've had a little bit of a bounce, but then we have a downward trajectory. This is the consumer discretionary. And these are basically going to show you that the consumer spending on luxury good items and the things that make people feel good allows them to feel like, yeah, I'm working so hard, but I'm getting something in return that keeps me motivated. This is the sector to watch out for, folks. Communication sector, I don't really care. I don't really pay attention. But we do need to talk about the technology sector. I did show you that while they had strength, there is potentially a distribution going on or a stalling action. So we need to pay attention to technology this week. And in part 4, when I talk about the stocks to watch and things of that nature, so you need to watch all of it, because if you just skip to certain sections, it won't make sense to you. And then the industrials, okay? These are the building materials. I mean, the people, steel companies. Of course, in a booming economy, these should be rocketing higher, but it's not doing that, right? It's definitely not doing that. And so, that's something certainly that's weak. And of course, the building materials, okay? Again, it was bullish, but then, we're just following this downward trend line, and then we got a little bit more impulsive with this the downtrend line that basically became what I call an impulse wave. And as long as that stays below there, we're probably going down here to test that area. Now, the other thing is energy. Now, energy did break out from this downtrend line, so that is bullish. We're above the 50-day moving average. Can it go a little higher to 96, maybe target this 97 area? Absolutely. Can it even go into 98? It all depends on how much they're going to push the weak sectors, and energy sectors have been weak as of late. Okay. The other thing I talked about is the consumer staples. While it's been bullish and breaking out, there's some signs that, this uh, typically a defensive sector, okay, is it going to continue to break out? Maybe it just chop sideways and then go higher. But these are the areas, these are the sectors that are showing strength right now, right? Healthcare. Healthcare is always going to be strong during market uncertainty, and this is absolutely no difference. I mean, it's gapped out and it's just buying time, probably moving higher, right? Utilities, okay, again, another defensive sector. We've been going up like crazy. Okay, this is a safety sector in a market uncertainty or during recessions. Okay, utilities, everybody needs them, but the question is that if the demand goes down to a point where people can't pay for it, because of inflation, because of job losses, and because of basically consumer demand destructions and credit card explosion and debt, what are these going to do? So these are something that we want to watch for. If in the future, and God forbid, we enter deflationary pressure instead of inflationary pressure. We'll talk more about that in some other video. I don't like talking about that deflationary topic. Okay, it's scary. Now, financials strong as ever, right? Because it's got the Fed put, central bank put. They can't have the banks fail. And we'll look into this sector a little bit. And of course, real estate gapped higher and it's just kind of moving sideways. And this is technically a bearish formation. But if you look at the real estate prices, yes, the demand is down, but the asset prices are going higher. I wonder why that is. Because of the printed money. Your U.S. dollar, each dollar buys less and less of any type of hard asset goods. Okay, the purchasing power is being eroded. It's not that your house became so wealthy. It's just because your dollar doesn't purchase anything anymore. And we talked about that, about how a family of four to live comfortably needs to make at least 177K. I mean, how many people out there really, average Americans, what are they making? What, 45 to 50,000 is probably the median, right? So there is a disconnect, and there is a disconnect between the Fed. So let's dig a little bit deeper into the sector analysis. Let's talk about the consumer demand destruction that is continuing, and I'm going to be talking about this until we're blue in the face, and that you guys understand, especially if you're of the bearish variety. Okay, remember, don't be married to one side or the other. Trade what the market gives you. Okay, but I think there's significant opportunity between now and to end of 2025, 26. This market volatility is going to continue for 2 years. It's not going to crash in a straight line. And we'll have another topic about that. But let's talk about the consumer demand destruction on the sector analysis. So we're going to delve right into it because the consumer discretionary is god awful. It's at 27.1. Last week it showed some signs of recovering a little bit, but it's just basically lackluster. And so let's see what's troubling our consumer sector. So here is the consumer discretionary sector. We just delved right into it, and I like to stratify these things really quick. And if you want to learn more about this, then you're gonna have to join my membership, right? And join our group. It's well worth it. I mean, these are all down here, very, very bullish, right? But one thing you need to look at is the market action over the last week, okay? And when you start seeing the divergences, you want to see these green things right here, right? Green saying that there's still positive momentums. And which are these guys? These are some obscure companies, some Netherlands parent company, MYT. That's a $5 stock. We got Bed Bath and Body Works. I mean, okay, that's fine. I guess you got Educational Development Corp. You got Tractor Supply Company. Very good company, right? But let's focus on this red here. Remember GameStop. If you are on the X.com, I basically talked about how they're going to be a pump and dump, and they pumped it up and they sold extra shares. And guess who bought them? It's you, the retail people, man. You just can't get enough of this. And then if you want to talk about that, go to X.com. I talk about it at length. Okay. In fact, I'm going to show you right now. So I talked about it, GME exit liquidity, dumb money, okay? And so I posted this thing, chart on Friday. I mean, who chased this, right? I mean, who's dumb enough to chase this? But it's who we are. It's how our brain is wired, and we really do go into a lot of our psychology and what it takes to be a successful trader, so that you don't get sucked into these situations, right? And so we want to, this is what happens on our X.com. We post these pertinent, up-to-date analysis, and it's free for now. I mean, our alerts members or our community members gets these earlier, obviously, but it still will be helpful if you join the X.com, right? Join us. Now, enough about this shameless self-promotion here. So we know what's happening to the GameStop. So one of the things that we want to look at is these strong sectors that are showing these basically negative momentums, right? The Honest Company, all right? Is that Jessica Alba Company, I think? Anyways, we got regardless, we got all these like companies down here that basically are showing, yes, there's some strength, but you see that it's waning, okay? So these are the companies that are basically showing the most amount of problems. I mean, we got these kind of now the middle of the road things. We got Mogu Company and all of these things, but these are all like, you know, like AutoZone, right? Pay attention to AutoZone. It's basically lacking. You know, AutoZone is like bomb-proof, but I think that is getting ready to sell off. Maybe I'll do a video on that later. We got Beyond Meats. Okay, look at the bottom half of these. These are the ones that you want to see, especially you want to see if they're going to have even more further downside, or you, if you're a contrarian, this is where you need to be fishing for. If you think there's a market rally coming, summer rallies right around the corner, you want to pick from these areas right here. Okay, because these are the ones that are going to have the most amount of short interest. Okay, so enough about that educational things. Okay, so we looked at how bad the consumer discretionaries are, right? Performing. They are not performing well. They are absolutely getting decimated. And we talked about how they're at the bottom end. The other one we want to talk about is the technology sector. In this technology sector, we are super interested in super micro because that has been the strongest one, but its looks are deceiving. This is where you're looking for, and this type of action, and then you marry it to your chart analysis, right? In our membership group, we were talking about super micro. Okay, those of you that took it, great, because I've been pounding the table about super micro, right? It paid well, okay? And this is how you do these analyses. And but technology sector is strong. But the fact is that it's important to know that even within these strong technology sectors are going to be stocks that are topping or bottoming, right? And this is what we want to be looking at. And so it's important for us to look at these type of levels. And then when we get to the bottom half, there isn't many, but there are ones like here, you know, that may be beginning to bottom here if they're worth it. I don't like to chase any stocks below 15 bucks, right? So if you look at like Apple, Apple's at the bottom end. They're kind of trying to recover. It's just been lackluster. I think Apple has a little more downside to go. Perhaps that's something that we want to look at. But again, looks are deceiving. When you look at super micro, okay, it's at the top end. It's the strongest yet, right? And yet the chart looks like dog crap. Okay, I'm just gonna show you really quick what super micro did. Okay, last Friday, look at that. Okay, so it may be topping from this downtrend. We're gonna be doing that chart analysis in part 4. So you know, be ready for that, please. Okay. All right. So that's what we got. All right, so that is our sector analysis on the technology, but let's take a peek at the financials. What is going on there? Okay, so financials are very, very strong. Let's dive into there, okay? there's some weakness in insurance brokers and financial admins, but realistically, all the full line insurance, property casualties, reinsurance companies and the banks, right? Banks are supposedly strong here. It's showing all kinds of strength, right? Let's dive into banks because banks are the ones that are typically should be in trouble, right? Um, I mean, talk about the Fed put here, right? Where are the weaklings? Okay, so let's we got all kinds of positive momentum. If we delve into it, I mean, it's like, this is how you do your analysis. You have to manually do your homework at this point. Okay. Yeah, you could probably set up some sort of an algorithm to do this, but realistically, this is what we got. This is all the banks. So let's look at all the ones that are basically showing some signs of weakness. I mean, there's so many banks here, and they're all bullish at this point, right? So here are the laggards. We got the Citizens Financial Service. If you want to look for some potential zeros, this is where you would be looking at. Okay, these are the ones right here, right? When the time is on, I'm not saying to go on short banks because that'd be stupid, right now. But these are the ones, make a list and start looking at the ones that you would be willing to look at as a possible contender for shorts. And of course, I'd probably look up into this area too. But banks are strong. I would stay away from financials if you're bearish. Let's go quickly into the VIX. Okay, the VIX is very important because there is a disconnect and there is a situation where we knew that when we hit here, that's how we timed our bottom of the market for the rally because they're inversely proportional. But we are now below this trend line, and we're going for the major trend line right down to here. And I think that we could even pop below into this area. There is a divergence forming on the MACD histogram going higher at this point, and that's important to note. Okay, very important. All right. And then, of course, on the CCI, we are having positive divergence. So we're very near. And remember, I think that there is going to be one more pullback before the summer rally starts. It's just, we're getting very close. And I think, you're seeing the declining velocity of the market rising as well as, the breadth is declining. Okay. And if you look right here, my very, very favorite PPOADX, yeah, it's still coming down, but we have that divergence. So can we be making a bullish formation on the PPOADX? So you need to pay attention to the VIX. It's very near the bottom. I don't think it's going to go much lower, but I think there is a little bit more downside coming. 10-year Treasury. This is what the Fed wants. Remember, my whole thing is that Fed wants to bring this down to below 42.5 so that they could keep their narrative that somehow their inflation fight is working. However, what we see is that the RSI has broken above the downtrending line. All of these trend lines you leave on because they all serve a purpose now or later, and they give you a nice guide in directionality. And again, we discuss those in our memberships. Now, we basically are here, and here are the confluences of all the 80 MA, 50 SMA, and as well as the 10 EM SMA. We need to get above these levels and then get above this downtrending line and then get above this previous uptrend line that is going to act as a resistance. I think that if it decides to get above here, this is the critical areas that you need to look at. Okay, I'm not going to tell you all the levels right now because I just need you to understand what I'm trying to get across here. MACD is forming a histogram divergence, okay? Maybe beginning to form this bullish hook. CCI obviously is showing some more divergence because from the downtrend, we are diverging higher. We broke out above here. We need to get above this downtrending line. Okay, so what's going on in terms of our, stochastics? Stochastics has also formed a bullish cross. It's all telling us, guys, that TNX is going to be going a little bit higher, and I think that's going to be the catalyst. I'm not sure what the catalyst will be in terms of them basically showing us what's going to happen, but even on the PPOADX, it's making a bullish formation, okay? That's going to be what's telling us. It's giving you a sign that perhaps TNX, I don't think the Fed is going to be able to achieve bringing this down into this 42.5, right below the 100 SMA. Perhaps we bounce off of here. Maybe they push it a little bit lower, fill that gap and move higher. Okay, but be patient and trade what the market gives you, not what you think you want to see. U.S. dollar has been beaten down, and that's how they've been, engineering this market rally. Okay, so really, where are we on the U.S. dollar? I think U.S. dollar has room to go down more. Okay, this support line on the RSI needs to basically hold. If it breaks below, then of course the dollar is going to come down. This is what the Fed wants. We don't want strong dollar because the stronger the dollar is, the rest of the world is reeling from their own economic implosion. They're not going to be buying our crappy stocks here. I think that this 100 SMA denoted by that arrow is important, but it could definitely get into this area. If we start down, getting below this 100 SMA into this area, it's the market's going to rally much higher. Okay, so keep that in mind. Okay, I think this dollar has more further downside to go. Now, having said that, we want to be watching our MACD, and that MACD, our histogram, maybe flattened down, maybe it goes lower. It's not really conclusive in telling us anything. I do know that the CCI on this downtrend is still diverging, okay? And it's in the contrarian extreme level. Usually at these levels, we get a bounce, right? And so keep an eye on that, okay? Dollar bounce, TNX rise, okay? And the VIX bouncing is bad for the markets, folks. And then let's look at what the PPO-ADX is saying, okay? PPO-ADX looks like they may be forming another bullish formation. If I get these cup formation, this is what I call the crush. This is a very powerful bullish formation. It hasn't formed it yet, okay? We're thinking about it. It needs to start curling. It needs to start curling over to form this formation, okay? Now, why do I give all these things, in painstaking fashion? Because I want you guys to learn. I want you guys to not get sucked in and become a retail exit liquidity. These are crooks running our country right now. Okay, so be careful. So let's go into SPY. Let's see what SPY is telling us. Okay, SPY's bullish, guys. I mean, it's like we broke out above the all-time highs. Okay, we have the RSI really. Basically directional. We have this line. We broke above there. Now, if we continue to go higher, the market's going to go higher. If we come down, there's strength. However, I think there is waning velocity now. It's running into that upper band of the Bollinger Band. But can it start to continue to grind higher? Of course they can. They can lie about the numbers, fabricate numbers, jawbone about how they're going to cut rates, and they won't. Fed cannot cut rates, folks. All right. Can we get above to 535 and then ultimately get into this 537? I think that we can get probably target near that 540, maybe 539, 90, 89 based on my calculations, and then stall. If it gets there, I'm not saying it will, but I think that right now it's inconclusive because it's at unprecedented territory. Is this a bearish reversal sign or is this a bullish continuation sign? Okay, we're going to find out. I think we go a little bit higher, okay, to kill off all the bears that are left and then get all the bulls euphoric. Remember, fear and greed is above 30, right? I mean, 65. That's greedy, all right? The bulls are back, which is music to my ears because it means, we have several factors that we need to look at. We need MSI to confirm. And if you haven't heard about that, then go back to part 1. But these are the levels. And I think realistically, we're going a little bit higher. And these are kind of the volatility range we're going to be going higher on. Okay. Now, having said that, there is some divergences forming on the MACD histogram. It's very important. Okay. And then obviously on the stochastics, we flattened out. On CCI, we got a slight divergences down. That's waning velocity, right? A decreased momentum. What's happening on the PPO ADX? Well, it's bullish as hell, but we got the PPO same as MACD, a little smoother and better. Are we going to do this? We're going to go up a little higher. So I think the top is coming in, okay, but it's still, I'm not going to call, bearish formation. Accumulation distribution, we're being accumulated. Question is, can we get higher here? And of course, the ATR is declining, right? We're declining, ATR declining as the market moves higher is showing lack of velocity, right? Lack of price movement. I use it 2 different ways, for velocity and also the extreme movements and turn in prices. Okay, at that moment, we went higher, right? And so we look at that, and when we get down here and then turn back up, that means that this bull trend is probably over, and that's where we're headed, folks. We got a little more downside to come. Let's look at SPY on the weekly real quick. Weekly, I mean, we have this long uptrend. We broke above the, all-time highs. Okay. Um, RSI still negatively divergent, but showing some strength. But obviously hasn't gone to where it goes. The volume is decreasing, but MACD is showing a bullish hook. We have some MACD histogram going higher. So basically, we've had all of these strength, and then so we need to see. Remember, weekly is longer. It takes longer. It's gonna take time for it to diverge. And basically on the CCI, diverging, right? It's all weak. But then on the PPOADX, this is telling you summer rally's coming. This is bullish right here, right? Right? And then we got accumulation distribution, it's just bullish as hell. It's probably going to go higher. And then we are at the bottom end of the channel. So I think on the weekly part, it continues to move higher. Then we're going to continue on this. I don't know what's wrong with this mouse of mine, but we're going to continue to go higher. Okay. So, but for all of you that basically think that the QQQ is going to go to 600, all right, I got news for you. It's not going to do that right away. Okay, in the summer, it's just going to chop with a bullish bias. It means that you have to buy the dips, but we're not there yet. Okay, I think we get one more pullback to destroy the longs. Okay, so this is SPY. QQQ is the same thing. Again, is this a bearish formation or is this a continuation formation? QQQ is a little bit more bearish in its appearance because I think the technology is being rotated out. RSI is negative. We've got divergence on the MACD. We got same thing, stochastic rolling over, right? We got the CCI rolling over. We got basically on the daily PPOADX forming our favorite bearish formation, right? It's trying to complete that. If it forms and does that, we're in business, folks. Okay, so keep an eye on it. We're close. We got the ATR and accumulation distribution also showing divergence, as well as the ATR now coming from here. Okay, that signal to turn. If we come down to here and then bounce, then the market may turn. Okay, but right now this rally is losing what? Momentum. That's how you use your ATR, folks. All right. Now QQQ, real quick. Okay, on the weekly, again, we're still in a negatively divergence, but on the weekly we made it up higher. That's what 4 weeks of nonstop Meltup does to you. But realistically, again, the target really should be right below that 470. I think if we start breaking below, I think there's going to be trouble in paradise. At this point, MACD, okay, is continuing to show some bullishness, okay, and that is coinciding with this. But watching the daily, watch the 130 minutes. Those are what's going to help you. Stochastics, still negatively divergent on the CCI still. And what I mean by that is, well, it broke out. Yeah, it's showing some strength, but from here to here, we're still negatively divergent. Okay, we have some bullishness on the PPO right there on the histogram because it's nothing more than a MACD. And then we've got this bullish PPOADX forming, okay, but I think this is going to be short-lived. I think it's going to do this and then form right back over, okay. Keep an eye on it. Accumulation distribution is negatively divergent still. A little signs of hope right there, okay, popping right up, all right. And then, of course, ATR is at the bottom channel, broke up above here, but now stalling out into here. Are we going down? Are we going up? Okay. If we continue to move higher, yeah, of course, it's going to gain momentum. It's going to go higher. But if we start turning here, it's going to be a short-lived pullback. Okay. That's what I'm talking about. Be on the lookout for that, folks. All right. I did want to talk about this breadth indicator. Let's just look at the daily. There is no breadth. I mean, there's no advancers and decliners. In fact, where there's more decliners than there are advancers, right? And so don't get sucked into this notion that this bullishness is going to continue. I think there's going to be one more sharp pullback, but it's not now. You just got to be on the lookout. Right now, to be honest, I think the Fed is hell bent on bringing down the TNX, trying to suppress the dollar, trying to suppress the VIX. Okay, all of these are manipulations. Okay, so we just play what we got. Okay, so this is what we have right now. I've answered what does VIX, TNX, and US dollars tell us about the market. Market is managed. It's it's on a bullish counter trend, but it is losing momentum. Okay, VIX is it's down so low, and it's just incredulous how they could push it down like that and make you believe that everything is awesome, but it's not. But we got to play what the market gives us, and we're going to be agnostic. TNX is ready to bounce if we can get above those levels that we talked about. And US dollar, right? I think it could go a little bit lower. I think they're really concerned about this US dollar. The other thing is SPY and QQQ. I think that on the weekly it's losing some momentum, but it is bullish, and it's foretold that, right? But on the daily, we're beginning to see some signs of divergence. It's just that it's not ready to roll over. And then in part one, we talked about McClellan Summation Index, fully directional. Maybe the MACD is beginning to flatten out, but I think we got a whole week and 3 to 4 more days. It doesn't mean there aren't going to be stocks that are going to be coming down. We talked about the consumer discretionary stocks, and then look within the technology sector and the computer hardware, especially in the AI sector. Okay. And NVIDIA is reporting earnings, right? So watch until the end of part 4 for summary and watch list. Okay, so in summary, we're still directional, and the melt-up was expected, and we called it. I think it's just not time to go all in short. We're still not done. Okay, QQQ and SPY showing signs of declining velocity and strength and momentum, but that could stay that way for a while. So SPY and QQQ is breaking out to an all-time high. Waning velocity is evident, though. TNX needs to show that it can break out. There is a confluence of these 58 and 10 SMA confluence that it needs to get over. But I think, we need to pay attention. Okay, rising 10-year Treasury yield is negative for the markets. Okay, it's something that you need to take a look at. U.S. dollar needs a little more to the downside. I think 103.98 to 103.50 is probably fair games. Keep an eye on it. The moment that thing starts spiking, you know what's going to happen. I'm going to be talking about gold in part 3, so prepare for that. Does anyone believe the VIX at 11.99? I think that it's possibly targeting 11.29, but I think that's it. I think at these levels, of course, right on cue, the fear and greed indicator is euphoric, right? They're greedy, all right? How did that work out for you all for the Wall Street bets following what's his name? The Roaring Kitty. They roll him out, probably got paid. Okay, get all the retail dumb money, hot and bothered, get sucked in. Okay, and then sell, do a secondary offering. AMC and basically GameStop. You should be ashamed of yourselves. Okay, all right. SEC, where are you? Why are you not doing your job? All right. Anyways, this is what we got. All right. Again, I'm going to be, like I said, offering more value into our social media. So obviously, our YouTube is going to be more educational geared. My videos are long. I was trying to do this under 20 minutes, but I didn't. Okay. Follow us on x.com at Galaxydoc Market. There's a lot of intraday and updates. Of course, our members get those information before I post them. Like us, share us, and above all, comment, okay? And thank you. Well, we're up to 1185 subscribers. I don't know. It's incredible. So subscribe us and like us. If you want to figure out how to work with me in any way, shape, or form, email me at coachbrandon@protonmail.com and schedule a consultation. Otherwise, let's get some alpha, man.